Hello, good morning, ladies and gentlemen. It's a very chilly morning here. Good morning, and how are you doing today? Let's quickly confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this party started. So I would like to see some response in the comment section so that I can confirm we are all on the same page. Okay, let's see what is happening right here in the comment section. Let's see, what do we have here? Okay, I can see Joa Nebar, good morning, thank you. Foster Lim, good morning, thank you very much. Adex Foley, 230, Razak, 140, 30. All right. Hey, Carrie, good morning to you. Yeah, it's happy Friday to you as well. So, I would like to take this as a confirmation that we are good to go here. So, I'm excited to welcome you to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and in the next 1 hour, I shall be your anchor, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's a Friday, the last trading day of the week, and obviously, we are going to be rounding off on all the pairs we have been monitoring since the beginning of the week. So, during the course of the session, I will be giving you tips on how we want to be rounding off on all of this trade. And we also want the reason why we shall be rounding off is simply because we want to be locking in all the profits we have made so far this week. We don't want to be losing out on all of this profit. So we are going to be moving our stop loss accordingly to protect our position against any sudden pullback. And it's peculiar with Fridays that there is a tendency that price might go against the previous trend, as participants will likely be taking some profits, and this will be reflected on the chart as retracement to the downside or to the upside, whichever case it may be. So I would like you to stay tuned in so that you don't miss out on any of these advices that I will be dishing out during the course of the session. And I can see Stone in the house. Good morning to you as well. And I've tried to make some adjustment to my microphone so that I can have a stable and credible audio quality throughout the live session. So, welcome once again, guys, and let's dive into the charts. Let's dive into the market and see what is going on right now. And before we go into that details, well, it's appropriate that we look at the economic calendar if we have any macroeconomic event that driving price movement. And obviously, what we can see here on Friday is the Chicago Purchasing Managers Index for the US dollar. It's not really an high impact event. It's a normal impact event which participants will likely be looking forward to decide where price will be moving. So we shall be anticipating this, looking at how the participants in this market we shall be reacting to this event. So with that being said, let's dive into the chart and let's look at the chart from a technical standpoint. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil here in the last 24-48 hours, we have been experiencing a choppy scenario here on the US oil. And during the course of the live session yesterday, we were around this area here, that is around the $78 level, which we identified on the daily time frame. And remember, we have been enjoying a bearish momentum since the beginning of the week as soon as price broke down that $80 level, respecting that descending channel. And we had some multiple entries which we added to our existing trade here right into the structure. But during the New York session yesterday, we saw a situation where price came back to our entry zone, taking us out on all the position we were in. That is all the sell position we were in yesterday with some profit though, and price has been consolidating somewhere around the $78.65 area in the last couple in the last 12, 15 hours thereabout. Now, going into the New York session today, what is going to be our plan? How do we intend to take advantage of any trading opportunities for today? Well, when I looked at the chart this morning, the first thing I was able to do here is to identify this trend line, which we shall be using as a guide for our trading activities for today. So I was able to connect the series of higher lows here to give me that bullish trend line that you can see here. And as you can see, this trend line has been guiding bullish momentum in the last 24 hours. And this momentum actually led to the breakout of the resistant level of that descending channel we were able to figure out during the course of this week. So we saw the breakout of the trend line here. So I would like to extend this a little further to the future. Hold on a second so that we can see things more clearly here. So that is the trend line that we have here. That's the resistant level of the descending channel. However, in the last 1 hour here, we saw price finally breaking down that bullish trend line to emphasize that the sellers, that the trend line could no longer hold buy pressure. So we saw an engulfing candle around that area, which for me at this particular point in time is likely going to be a bearish signal. But the current structure we are in right now, it's quite at an equilibrium, as we need a little shift out of the structure to give us a better perspective of where price will be going. So now that we have a breakdown of the bullish trend line here, if we look at this from a technical standpoint, we should be expecting that price might likely come back to do a retest of that trend line, which also shares a confluence with the $78.65 level. We are selling pressure below the structure will further incite another wave of bearish momentum to the downside. And you know, since the beginning of this week, we have been witnessing bearish momentum, as you can see here. So we started the week at around we started the bearish momentum around the $80 level here at the beginning of the week, and we rode it all the way down. And though we had the breakout of the resistant level here, so we are a little a critical point here where price might likely do a retest of this resistant level. Remember, it was broken here yesterday, and then we might be seeing price come back and do a retest of that resistant level of that as descending channel to incite another wave of bullish momentum. So that is why I'm saying that we are at a critical point here where we need to be very patient to see how price action will be relating to the $78 level area, which also shares a confluence with the resistant point of the descending channel. So if you had missed out on this opportunity here right below the $78.65, that is a sell opportunity there, well, I will advise us to remain patient as we are going to be looking out for two possibilities to happen here to probably join the bear momentum. And the first scenario is price comes back to do a retest of that structure followed by selling pressure on our lower time frame. We could actually join the decline to the downside, and if a further breakdown of the $78 level happens, then we want to be adding more position as we ride that momentum to the downside. So that is one scenario we are going to be looking forward to. Then the other possible scenario is that we might be having an outright breakdown of the $78 level during the New York session today. And if that happens, which also shares a confluence with that resistant level of the descent, a retest of structure followed by selling pressure below this level will be giving us a sign that we should be joining that bearish momentum to the downside. So at this point in time, considering this breakdown of this bullish trend line here, it is appropriate that we start looking out for selling opportunities at this point. So as long as price remains below that bullish trend line and below the $78.65 level, we want to continue to look out for selling opportunities. So we have a simple structure here that we shall be using to guide our trading activities for today, and that is this bullish trend line here, which appears to have been broken in the last 1 hour here. Then if price continue to trade below the $78.65 level, which also shares a confluence with that bullish trend line, we continue to look out for selling opportunities there. And if price continue to break down those structures that we identify here at the 78, we have another one at the $77.60 level, a breakdown retest of the structure on our lower time frames should be giving us another opportunity to add more position to our existing trade here. So that is what we are going to be looking forward to today on the US oil. And before I close the curtain here on the US oil, I would like us to quickly have an holistic view of what is really going on the daily time frame, so that we can see if the sell momentum we are looking at on the 1 hour time frame is actually valid. So scaling up a little bit to the daily time frame. So this is what we have here on the daily time frame. And one thing we observed at the beginning of the week is the fact that price has been on a bearish momentum since the um, beginning of the second half of this year, and we had that bearish trend line figured out after connecting the series of higher lows. And when we zoomed into what has been happening here in the last couple of months, we noticed that price was caught initially caught within a channel that is between the $93.50 level, which was holding selling pressure, and then we had the $78 area, which was holding buy pressure, before we finally witnessed the breakdown of that demand zone here at the beginning of this month. And that was a very good signal that we might likely be having a trend continuation to the downside. And from a technical standpoint, whenever we have a breakdown of structure like this, we expect that price will likely come back do a retest of structure to incite another wave of bearish momentum. And what we can see here now shows that we have been witnessing selling pressure right around the $80 level since the beginning of the weeks, giving us a sign that sellers are still very, very strong in this market. And we might likely see a situation where price will continue to the downside right below the $78 level, followed by selling pressure right below the structure on our lower time frame to give us that leverage to join that or add more position to our sell position that is currently running at those points in time. So this is what we are going to be looking forward to for today. So on the US oil, we are not looking forward to any buy opportunity here unless price breaks out of the $8 level, taking out all the sell position around this area to give us that opportunity to buy. So if we don't see a breakout of the $80 level, we will be placing the option to buy on hold. And as long as price remains below the $80 level or the $78 area, continue to hold on to our sell opportunity, sell position, and remain comfortable as we ride the move all the way down. So that is my scenario here on the US oil. If you have any questions whatsoever, feel free to drop your inquiries in the comment section. And if you think you want some further clarity on one particular aspect I just explained to you, feel free to drop your inquiries right in. So this is the 1 hour time frame once again. And remember, we've already identified a structure that we shall be using to guide our buy, our sell opportunity here. We have the bullish trend line on the 1 hour time frame. We have it right here. And in the last hour, we saw the breakdown of that trend line to signal the strength of the sellers at this point. And in fact, if we look at the structure here in the last 48 hours, we saw that breakdown of the $78.65 level. We have been selling pressure right around that area to further emphasize the strength of the sellers at this point. So every attempt by the buyers to break out of the $78.65 level has been met with strong resistance from the sellers. So what we are going to be doing now is to continue to remain on that sell position right now. And as long as price remain below the $78.65 level, a level which also shares a confluence with this bullish trend line, we remain comfortable in our in our sell position. And I told you here that we have two scenarios, especially for those who missed out of the breakdown of the $78.65. We have two scenarios we are looking forward to. One is the fact that we want to see how price action is going to be relating to the $78 level. And then if price probably buy pressure coming here, and then we see a situation where price comes back into the 78.65 or probably the bullish trend line here, followed by selling pressure, then we want to be joining the decline to the downside. And the other scenario for selling opportunity here is if price breaks down the $78 level, then selling pressure below this level should be giving us an opportunity to join the decline to the downside. So these are my scenarios here. I will be running through the charts right now and see if there are any questions regarding what we just explained so far before we move on to the next option. So we can see I can see Stone in the house. Good morning. 997, good morning to you. Trending Glover, okay, good morning. Kairu Karim, good morning to you. Farah444, good morning. And Uhandi, good morning to you as well. So, in the absence of no question, I want to assume that we are all good to go. So, I will be diving to the next option right now. And the next option we are going to be looking at this morning is the US Tech. And in fact, the US Tech was a profitable trade for us yesterday, as in the last 24 hours, we were able to take advantage of a 250 pips move before the sell momentum started below the $11,000 level. And for those who had been part of this journey, well, kudos to you guys for being on standby to catch this move when it happened. So since the beginning of the week here, we have been profitable on the US Tech. Remember, we took advantage of an initial sell position right below the $11,015 level here. That was on Monday. We initially identified a channel between the 11,090 and the $11,015 level here, where we said we are going to be looking for either a breakout or a breakdown of this channel to give us a confirmation of where price will be going for this week. And we saw the breakdown of the 11,015. That was a very good sign for us to join the decline to the downside, and we actually did and rolled price action all the way down into the $10,700 level, which gave us over 300 pips in profit. And in matter of fact, we had an opportunity to add more position to our trade, as we had another position right around the 10,890 on Tuesday. And then on Wednesday, also, we had another position below the 10,800 as price action took out all the buy position around the 10,800 here. Remember that level was holding by pressure at one point in time before we finally witnessed that breakdown of that structure. So during the live session yesterday, we had a situation where I told you that the buy pressure around this area might likely incite another wave of bullish momentum in such a way that it could be a retracement of the previous impulse leg that we had here. So I told you I took advantage of a buy position around this area at the 10,715. And to make our job easier during the New York session yesterday, I was able to identify a trend line which I said we shall be using as our guide for trading activities. And the trend line was as a result of connecting the series of lower highs here. Remember that trend line price has been finding lower highs since the beginning of this week. So we had a trend line figured out yesterday. And we said if a breakout of the trend line happens, we want to be joining that bullish momentum to the upside. And in fact, 2 hours into the New York session yesterday, we saw the breakout of that structure. And if you are taking that move, kudos to you, as you will currently be running with 150 pips in profit right now. So the next thing I will be advising us to do right now is to move our stop loss accordingly to lock in some profit. Remember, we want to lock in some profit here, and we don't want to lose out on what we have gained so far. So I will be suggesting that somewhere around the $10,830 level should be most appropriate at this point, as we want to be giving price action some breathing space to run around before probably another wave of bullish momentum will happen at this point. Now, during the early hours of today, I think in the last couple of hours here, I saw the situation where price came back into the 10,850. Remember, this level was broken during the New York session yesterday around here. And if we go to as far back as last week, the beginning of this week, we saw how that level has been holding selling pressure for quite some time before the breakdown of that structure happened. And now we have a breakout of that structure here yesterday, and price appeared to have come back into the structure during the early hours of today, followed by buying pressure right around that area to signal that there is a possibility that price might continue to go to the upside from the $10,850 level. So as a result of that, we place our stop loss right below. I bought again around this area, and I'm hoping that price will continue to go to the upside. And if you had actually taken advantage of this move right here, Well done to you for taking advantage of that move, as you will currently be running with about 50 pips in profit, which is not bad anyways. So what we are going to be doing, if you are taking advantage of this move here, is to move your stop loss accordingly. Let's lock in some profit at the entry level where we are. So in case price turns it around against us, we shall be at break even. So we are not in a loss, and neither are we in profit if price takes us out of this position. Now, for those who had missed out on these opportunities that we had in the last 24 hours here, well, let's see if the market will be presenting us with another opportunity to join the rally to the upside if price will be going to the upside for today. So now, with the current structure we have here, what I will be doing here is to identify a simple setup we shall be using to guide our trading activity. So when I bring out my line chart here and connect the series of lower highs here, I will be calling this a temporary bearish trend line in the meantime here, as it has a tendency that buyers might break out of that structure. So if we connect the lower highs together here, I'll be using this as a yardstick for trading activities for today. So what I'll be looking forward to is this. If you had missed out at the entry at the 10,850, let's wait out and see if price will break out of the trend line. And if it does, if we scale down to a lower time frame and we start seeing buy pressure right above the structure, we want to be adding more position to our existing trade, with our TP target sitting right around the 11,090, which is the resistance point for where price action started this week. So in addition to this trend line, let us identify a structure here around the 10,900 um, level, which if you look into the past year, you can see that this level also has been a major determinant of price action. I will be showing you that in a moment. So let's quickly identify this 10,900. And if you look at what happened here on Tuesday, we also saw that level also was holding selling pressure at that particular point in time. And then on Wednesday as well, we also saw that same situation here where sell pressure came in at that point. So if a breakout of that level happens here, then we might be a good sign that buyers are taking out all the sell position there, followed by buying pressure on our lower time frame. It will be a very good opportunity to join that trend continuation to the upside. Now, in addition to the temporary bearish trend line, there is this bullish trend line which we identified yesterday. We're also going to be using that trend line too as a guide. Now, what happens if price does not break out of the 10,900 and instead it continues, takes us out of our buy positions and breaks down to 10,850? Well, at this point, if price breaks down to 10,850 and we start seeing selling pressure, well, it's not time for us to be selling at this particular point in time. And the reason why that is simply because if we look at what has been happening here since last week, we saw that this level has been a strong buying niche for participants in this market. And in fact, till this week, we saw buying pressure right around that area. So we want to be very mindful, as even if we cite a breakdown of the 10,850, it might likely be a fake breakdown in such a way that price might come back into this bullish trend line. Remember, we identified this trend line yesterday, which was holding by pressure yesterday before the live session. So we might likely see a situation where price comes back into that structure, and another wave of bullish momentum could likely ignite from that structure. And you can see it lines up with the previous demand zone that we have here. So let's see how price action plays out. So if price does not if price breaks down to 10,850, well, we want to be patient to look out for buying pressure around that area to join a trend continuation to the upside. But if instead we see a breakdown of that bullish trend line, that is breaking down this bullish trend line, and if you look into the past here, you see that the demand zone here will be broken to the downside if the breakdown of that bullish trend line happens. Then if that happens, followed by selling pressure below the structure, then we might be in for another wave of bearish momentum. As you know, since the beginning of the week, we have been on a bearish momentum here. So you might likely see a situation where bearish momentum will continue, but it won't continue. We won't join that decline. We only join the decline if price action breaks down this temporary bullish trend line that we have here. So for those who are going to be trading the US tech for today, I will advise you to screenshot my screen so that you can use it as a reference point when you're about making your individual decision on this option. So that is my view here on the US tech. There is no need to scale up to the daily time frame as we already have a simple setup to play around here on the 1 hour time frame. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, or if you have any if you need me to shed more light on a particular structure or explanation I made earlier, feel free to drop your inquiries in the comment section. So that is the view we have here on the US tech. So I will be moving on to the next pair. So the next pair we are going to be looking at today is the USDJPY. And in fact, on the USDJPY, it has been a roller coaster of buy and sell on this pair since the beginning of the week. We started the week on a bullish note, remember, as we took advantage of a buy opportunity right above the 133.150 Japanese yen level after we identified a very important key level at the 133. Remember at the beginning of the week, we said the 133.00 level shall be our guide for trading activities for this week. And in fact, that level was a very, very good tool for our trading activities. So we took advantage of the buy position right above the 133.150, and it gave us over 130 pips before we started seeing that bearish momentum. And we also added one more position here on Wednesday here. We added one more position here, and also we also added another one on at the later on Wednesday at the 133.600, and price moved up a little bit. So we had about 200 pips thereabout on the USD JPY before that sell momentum started during the early hours of Thursday. Now, during the live session yesterday, we were around this point where price action was caught within a consolidation phase between the 133.600 and the 133.850 level. Remember, this is where we were during the New York session yesterday. We saw a consolidation phase around this area. And one important thing about that consolidation phase is the fact that it shares a confluence with this bullish trend line that has been guiding bullish momentum since Tuesday last week. So we saw that a huge consolidation phase was happening around that area, further emphasizing the indecision in that market. And I told you that this level, this zone here is a critical point in this market, as either a breakout of that structure or a breakdown of that level will be inciting a momentum on that direction. So whenever we have this kind of channel like this, we will either look out for a breakout to give us a situation where price might respect that bullish trend line one more time to push price to the upside. And if that is not the case, and instead we have a breakdown of the 133.600, it will be a good opportunity for us to sell. And in fact, it was the opposite that happened. We saw the breakdown of the 133.600. We gave us another opportunity to sell the USDJPY yesterday. And in fact, if you had been part of this trade, kudos to you for being on standby to catch this move, as you will currently be running in profit with over 160 pips in profit. Now, it didn't end there, as we saw that price action came into the 133.00 level. Remember, we had the structure also figured out yesterday, as we shall be looking out for a breakdown of that structure to add more position to that trade. And in fact, we had that opportunity to join. And if you had also added position in that area, you will be running with over 100 pips in profit at that point in time. So these are good scenarios for us on the USDJPY. And congratulations to everyone who are taking advantage of this move. So now that we are going into the New York session today, what is going to be our plan on the USDJPY? Are we going to continue to see sell momentum right rolling down to the downside, or we might likely see a reversal pattern from this area that might incite another wave of bullish momentum? Remember, we had the breakdown of that bullish trend line here during the course of the New York session yesterday. So if we have a breakdown, we might likely see price come back to do a retest of that structure to incite another wave of bearish momentum. So what we are going to be looking forward to today is to see how price action is playing out on the daily time frame, and then let's use that to identify trading opportunities on the lower time frame here. And one thing we also need to take into consideration is the fact that we have a macroeconomic event coming up today in the form of the Chicago Purchasing Managers Index, which is coming up in 3 hours. 3 hours from now, I guess. We are looking forward to this event also, which has a tendency of driving price movement. And if you look at what happened here the last month, we saw that it is 37.2, and consensus are projecting a 41.2 figure, which looks more positive for the US dollar. So let's see if this is going to be met, or we are going to be having um, something below this expectation here. So in that regard, we will quickly run through the daily time frame. Let's have a quick view of what is going on from an holistic perspective. Then we shall be coming back down to the lower time frame to make a decision for today. So right now we are back on the daily time frame, and remember how we identified a bullish trend that lasted for a year now, as we saw this bullish trend line after connecting the series of higher lows. And then during the course of last month's trading session, we saw the breakdown of that structure. Now, things got a little bit interesting in the month of August as we cited a reversal pattern sitting right on that bullish trend line here, which gave us a clue that we might be having a reversal move anytime from now. And at that point, there was a neckline identified after citing the double bottom structure here that we shall be using to guide trading activity. And in fact, price action broke out of the neckline, and it took over 3 to 4 months before price action came back to do a retest of that structure. And what we noticed here when price action came back to do the retest of that structure is that price was caught within a little consolidation phase between the 138 Japanese yen level and the 135 area before we witnessed the breakdown of that structure during the course of last week's trading session to send a bearish signal um, across the market. Now, one thing that's caught my attention here is the fact that as soon as price got into the 131 Japanese yen level, we started seeing buy pressure from that area during the later part of last week trading session till this week. We started seeing buy pressure coming from that area. So if we consider the buy pressure here and compare it with what has happened here the past, hold on a sec. Hold on a sec. Okay, sorry about that, please. So if we compare what happened, if we compare what happened here at the 131 Japanese yen level and compared to what happened in the past year, we saw that in the past year, in the month of August, we also saw buy pressure coming around that area. And even if we go as further again, we saw in the month of June, we saw buy pressure come in from that area as well. So we are going to be looking at what is really going to be happening here around this area again. So now with the selling pressure that started yesterday around this area, which we actually took advantage of, price appears to have come back into somewhere around the 131 Japanese yen level. So we are at a very critical point in the market right now, as we don't know how the market is going to be reacting to the macroeconomic event coming up today. So right now we at a level that has a memory for buying power. So we want to be patient enough to see how price action will be reacting to the 131 Japanese yen level to decide if we are going to be seeing another opportunity to join a bullish momentum where the structure here might likely evolve into a double bottom structure to where the 135 will remain the neckline area of that reversal pattern to incite another wave of bullish momentum. So that is one possibility that could likely happen during the New York session today. And if in fact we have a breakdown of the 131 area, remember that level has been a strong demand zone in the past. And if a breakdown of the structure happens here, then at this point in time, we want to be seeing this as a bearish signal. And if we are lucky enough, we start seeing selling pressure right below the structure on our lower time frame, it will be a very good opportunity to join that decline to the downside. So at this particular point in time, you would agree with me that it is very, very important that we remain patient here and let's wait out to see how price action is going to react to the 131 area before making any decision for today. So what we are going to be looking out for on the lower time frame is if we start seeing buy pressure around this area, we might be in for another wave of bullish momentum. And if a breakdown of the 131 happens, followed by selling pressure on our lower time frame, we might be in for a sell position on the USDJPY. So in this regard, and with the information we already have here on the daily time frame, let's quickly scale back down to the 1 hour time frame. Look out for the 131 level and let's mark out our strategy for today. So now here we are back on the 1 hour time frame. So the next thing we want to be doing is to identify the 131. So we have the 131 area here. And for the sell position we took advantage of since yesterday, we should be having our TP target sitting around this demand zone. It could be somewhere around the 131.200 and the 130.500 level. So let's see how far this move is going to go. Now that we are going into the New York session, what is going to be our plans for today? Well, the first thing I'll be doing here, considering the fact that we have been on a bearish momentum since on Wednesday of this week, I would like to connect a series of lower highs, and to do that, I'll be bringing out my line chart here, and then we connect the series of lower highs here to give us that resultant bearish trend line which we shall be using as our guide for trading activities for today. So let me bold this a little bit so that we can see clearly, and let me give it a red color to emphasize its importance for today. So we're going back to our candle chart and do some readjustment here. So we have the bearish trend line figured out here. So this is what we are going to be using to guide our trading activity. So at this point in time, we already have a breakdown of the 132.400. And if we do have a retest of that structure during the New York session today, that is, if this bullish momentum comes back into this area, which also lines up with that bearish trend line here, and we start seeing selling pressure below the structure on our lower time frame, then we could be getting ready to add more position to our existing trade with our TP target sitting somewhere around the 131.200 and the 130.500, which I stated earlier. So that is one scenario we are going to be looking out for selling opportunities on the USDJPY. And another one is if price continues to the upside, to the downside rather, and breaks down the 131 Japanese yen level, then we might be looking forward to adding more position at the breakdown of that structure. Now, what happens if price does not go this far to the downside and instead it continues to, and the bullish momentum here continues to find higher highs? Now, what we are going to be doing here is to see if price breaks out of this bearish trend line at a level which also shares a confluence with the 132.400. And if this happens, then definitely there is a tendency that we might be having a shift in momentum. And if we are lucky enough, price does buy pressure right around this area, I'll probably do a retest of the trend line, buy pressure around the 132.400. It could be an opportunity to join the rally to the upside with a TP target sitting right around the 134. Let me see, around the 133.34.300 and the 134.500 level. And the reason why I'm placing my TP target here, if a bullish momentum kickstarts from here, is the fact that, remember, we had the breakdown of this bullish trend line, which has been holding by pressure since on the 20th of December last week. We saw the breakdown of that bullish trend line there. So we might likely see a situation where price might likely come back to do a retest of that structure at that point. So if a breakout of the 132.400 level happens here, we might be looking forward to a reversal move that might likely hit that bullish trend line there. So we shall be looking out for all these possibilities that might likely happen today. So to guide our trading activities for today, remember, I have identified two structures here. The first one is the bearish trend line here, and the second one is the 132.400 level for selling and buying opportunities. So if a breakout of the 132.400 happens, remember, we are getting ready to buy the USDJPY. But if a retest of that level happens, followed by sudden pressure on our lower time frame, we are good to sell, add more position to our sell position on the USDJPY. So these are my views here on the USDJPY. It's quite a simple setup here, and I hope that we'll be on standby to catch this move when it happens. Also try to screenshot my screen so that you can use it as a reference point when you're about making your own decision for today. So in the comment section here, I can see Steamroller, thank you. Thanks for the compliment. All right, thanks. And thanks for the feedback yesterday. All right, Espartaco is asking if will JPY go down. Well, I just explained to you that uh, we have two structures we shall be using to guide our trading activities for today. So I have identified this bearish trend line, the red dotted line you can see on your screen right now, and we're already in the sell position. So what I said is that if price comes back into the trend line or the 132.400 and we start seeing selling pressure on our lower time frame, immediately price goes there, we scale down to our lower time frame, look out for selling pressure right below the structure, then we could actually add more position or join that decline to the downside. But if price breaks out of the 132.400, then this could likely be a buy signal. If we notice buy pressure around this area on our lower time frame, then we could join the rally to the upside. So we're already in a sell position here. And for those who had missed out on the sell position we took advantage of in the last 24 hours, I will advise you to remain patient at this point in time, as we cannot join a moving train at this current structure. So we should either wait for price to come back and do a retest of this level to join the decline to the downside, or you wait out for price to break down the 131 Japanese yen level to sell the USDJPY. So if you are not part of the positions we took advantage of in the last 24 hours, I advise you to remain patient and wait out for the structures to evolve before joining any decline here. So that is that on the USDJPY. Then I see 9023 asking that do we buy gold or sell now? Any suggestions? Well, I think we did something on the gold. If you had missed out on that, okay, we are going to be treating gold in a moment. So stay tuned in so that you don't miss out on that. George Les, good evening to you. Steamroller. All right, so let's move on to the gold and let's quickly trade this. All right, so what's happening on the gold? So I think the gold has been at consolidating for most of the time yesterday, and we had a situation where I actually missed out on this buy opportunity on the gold. And for those who are taking advantage of that buy opportunity yesterday, well done to you guys for being on standby, as we saw a breakout of the $1,806.50 level, multiple rejection of that level to give us an opportunity to join that rally to the upside. Hold on a second, please. Okay, I'm trying to sort out some technical. All right, I'm back. So we had an opportunity to buy the gold yesterday. I actually missed out on this opportunity sincerely. So we had the breakout retest of the $1,806.50 level with multiple entries above that structure to give us an opportunity to buy the XAUUSD. And if you are taking advantage of this move right around the $1,806 level, you would currently be in profit of about 1,300 pips. Remember, we had our TP targets at around the $1,820 level. And the reason why we placed our TP target at the 1,820 level is because of the fact that that level has been a strong selling niche for participants in this market since the beginning of this month. So we saw that every time buyers try to break out of that structure, we have been witnessing selling pressure around that area. In fact, on Tuesday, we had a huge attempt by the buyers to break out of that structure. Remember, we took advantage of this buy position right above the 1,806, which broke out of the 1,820 with about 1,800 pips. But immediately after price broke out of that structure, the next hour we started seeing selling pressure coming again to break down the 1,820. So with the buy position here yesterday, we also had about 1,300 pips as price action hit our TP target at the 1,820. Now that we are going into the New York session today, what is going to be our plans? Well, for us to trade the XAUUSD today, I was able to identify a single setup, a single structure that we shall be using. And the first one is this trend line here. As you can see, in the last 48 hours, this trend line has been a major determinant of price action. As you can see, when price was below it, there was a retest, and when price broke out of it, there was a respect of that bullish trend line. So what I'm going to be looking forward to today is that we shall be using this trend line to guide our trading activities for today. Now, one thing we are going to be looking out for is if price breaks out of the $1,820 level, then we start seeing buy pressure right above that structure. We want to be getting ready to join or add more position. If you still have a buy position running here, we want to be joining the rally to the upside if that happens. Then the other possible scenario that might likely happen here is if price breaks down that trend line in such a way that we have a breakdown of this trend line with selling pressure below the trend line area on our lower time frame, then we want to be joining that decline to the downside. And one thing about the decline to the downside here is the fact that we want to be monitoring what happens when price action gets back into the $1,806.50 level. And the reason why we need to have a closer look at that structure is simply, let's see what has been happening here since the beginning of the week. Look at what happened here on Monday. I think on Tuesday, when we bought the gold, we saw that buy pressure resumed at exactly that same area. And then, though we saw the breakdown of the structure, price climbed up again at the 1,806 level to push price to the upside. So if we are selling at the breakdown of this bullish trend line here, and price continues to go to the downside, we want to be waiting to see how price action is going to react to the 1,806, a level which also shares a confluence with that bullish trend line that we identified at the beginning of the week to determine if price is going to continue to the downside, or we're going to be seeing another buy pressure around that area to incite another wave of bullish momentum. But if a breakdown of that structure happens, we have no choice but to think of adding more position to our existing trade. And if a further breakdown of the $1,800 level happens again, then we will be looking out for opportunities to add another position to our existing trade on the XAUUSD. So we have quite an a tendency of having multiple entries on the XAUUSD. And do remember that we have a macroeconomic event coming up today, which has a likelihood of affecting price movement, and that is the with the Chicago Purchasing Managers Index, which is coming up in 2 hours from now. So we want to be looking forward to that event to drive price movement. So we are going to be seeing some level of anticipation for this event coming up, and we shall be seeing the reflection of this right on the chart. And in order to make our job easier during the New York session today, I would like to identify a structure here at the $1,815 level, where we shall be using that also to guide our trading activities. So let me label this for the sake of clarity. So we have the $1,815 level, where I will be looking out for a breakdown of that structure to signal a selling opportunity for me here. So if a breakdown of the 1,815 happens during the New York session today, then we shall be looking out for selling opportunities on our lower time frame below the structure to join that decline to the downside. And please do not forget that we are going to be looking forward to see how price action will be reacting to the $1,806.50 level to give us an opportunity to know if price is going to reject that level to incite another wave of bullish momentum, or we are going to be seeing a breakdown of that structure, which will be giving us an opportunity to add more position to our existing trade. But before I close the XAUUSD for today, I want us to have an holistic view of what is really going on in this market, and let's be on the same page, especially for those who are not part of our live session at the beginning of the week. So you can understand why we are thinking the way we are thinking at this particular point in time. All right, so on the daily time frame here, what we had here on the daily time frame is that despite the fact that price action has been on a bearish momentum since the month of March, we had this key level at the $1,800 level, which has been a major determinant of price action since the beginning of the year. And if we zoom to as far back as December last year, stroke February of this year, we saw how that level was holding accumulation for buy pressure before we saw that ignition of bullish momentum that took price to the $2,080 level in the month of March. Now, since then, price continued to find lower lows and lower highs. Then also at the $1,800 level here in the month of May, we saw another attempt by the buyers to push price to the upside, but unfortunately, it was met with strong resistance from the sellers, which finally led to the breakdown of the $1,800 level in the month of July. And throughout the second half of this year, price has been trading right below the 1,800 to emphasize the strength of the sellers at this particular point in time. So when we look at what happened in the month of November, we saw the breakout of the trend line. Price climbed up, but as soon as price got into the $1,800 level, that very important key level we talked about earlier, price was caught within a huge consolidation phase. And in fact, this consolidation phase lasted about 4 weeks here, as there is a huge indecision in this market right now. And since the beginning of this month, we have been seeing multiple rejection of the 1,820, as every attempt by the buyers to continue to push price to the upside continue to get some level of rejection from the sellers around the $1,820 level. And that is the level I showed you on the 1 hour time frame, where we have been witnessing selling pressure from that area. And if the selling pressure continues, and if buyers are not able to break out of this structure, in fact, about 4 weeks old now, buyers have been trying to break out of the 1,820. And if this continues, there is a tendency that sellers might likely come in, and there could be a rally for the dollar, and this will end up being probably a retracement of that previous impulse leg back into somewhere around our golden zone area, where we'll be looking out for another wave of bullish momentum. But for me, on this at this point in time, it is very likely that sellers might come in at this area, considering the fact that we look at the nature of the wicks here of these candles. Look at the nature of those wicks there. We see multiple rejection of the 1,820. And to be on the safer side, if you're a long-term trader, you might want to wait for price to break down the 1,800 to join that decline to the downside. So if you want that kind of scenario here, and you can afford about, let me see how many pips that is, about 3,000 pips. You can afford the 3,000 pips stop loss for your trade. That's if you're a long-term trader. I'm talking about people who hold the position for like 2-3 weeks thereabout, and you can afford about 3,000 pips stop loss. Then you could have a stop order right below the 1,800, with the hopes that price will get to as far as the 1,680 in the next couple of months. But if you are not, well, we'll scale down to the dollar time frame like we did, and look at how price is reacting to the 1,820 to decipher how price is going to where price will be heading towards in the next couple of weeks. So let's go back to the 1 hour time frame, and let's see what we have here. So on the 1 hour time frame, price is currently sitting at the 1,815 level, a level which has been holding by pressure in the last uh, in the last in the last 12 hours thereabout. So we have been seeing buy pressure above that structure, and that level also shares a confluence with this temporary trend line I identified this morning. So let's see how price action will react to this level. And for those who had missed out on this opportunity here, I told you, let's remain patient here. We are not buying the XAUUSD unless price action breaks out of the 1,820. Price does not break out of the 1,820 with a close above the structure, we are not thinking of buying the XAUUSD. But if price breaks down this trend line that I just identified here, which also shares a confluence with the $1,815 level, then we want to be looking out for selling opportunities on the XAUUSD. So that is my scenario here on the XAUUSD. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. I'm actually running out of time, so I will just run through all the pairs we have talked about today before I call it a day. I'm so sorry, Scott Benji. I just saw your comment and it's very unlikely for me to take this. I hope we can do something on this next week. And once again, compliments of the season to you, Scott Benji. I've not seen you quite in a while. Hope you are doing well. All right, let's quickly run through the US oil. The first commodity we treated today is the US oil, where we took a seller position this morning as price action broke down the $78.65 level. And one thing I said about for those who had missed out on this opportunity is that let's wait out and see how price action is going to be relating to the $78 level. And what we've been looking at in the last 1 hour now is the fact that we have been seeing buy pressure around this area. And I called our attention to the fact that we had a breakout of the descending channel here during the New York session yesterday. We had a breakout of the descending channel, and we might likely have a situation where price comes back to do a retest of that uh, trend line, which was broken yesterday to incite another wave of bullish momentum. So we have to be very careful at this point. So I said those who had missed out on the sell position below the $78.65 level, we want to be waiting for two opportunities to join the decline to the downside. One is if price comes back to do a retest of the structure that was broken, followed by selling pressure on our lower time frame, then we could join that decline to the downside. And if instead price does not go that far and we have a breakdown of the $78 level, followed by selling pressure on our lower time frame, we want to be joining that decline to the downside as well. So on the US oil for today, we continue to look out for selling opportunities as long as price remains below the $78.65 level and the $78 area. And if we are going to be buying the US oil for today, well, I want to be seeing an outright breakout of the structure. Remember, we have a structure here that has been holding selling pressure in the last 12 to 18 hours around the $79 level here. We have been seeing selling pressure around that area. So what I'll be suggesting is that if a buy opportunity is going to come, we want to see an outright breakout of that structure, breaking above and finding price settle right above the bullish trend line here to incite a bullish momentum. If that does not happen, we remain bearish on the US oil. Then we went on to talk about the US tech today, and the US tech has been a profitable trade for us since the beginning of the week. Remember, we initially joined the sell position right below the $11,015 level here, where we rolled the move all the way down into the structure with multiple entries. Then we started seeing buy pressure coming around the $10,715 level yesterday, and we also took advantage of this move as it broke out of the trend line, which we used as our trading guide for yesterday's trading session as price moved right above that structure. And for those who had missed out on all of these opportunities, I've stated that today we are going to be having two structures to guide our trading activity. The first one is this temporary bearish trend line, which we identified here, and I said a breakout retest of that structure on our lower time frame should be giving us an opportunity to buy the US tech. And also we have the 10,900 level, which also shares a confluence with this trend line. So what this simply means is that as long as price remains above the 10,900, we're comfortable in our buy position here. And I also added another thing here that if price takes us out of our current buy position in such a way that it breaks down to 10,850, we shouldn't be thinking of selling yet. Remember, we have a buy structure around this area. We had a demand zone around this area, which is about 2 weeks old right now. And that level still has a tendency of holding buy power. And if you look at the structure we had here yesterday, we had a bullish trend line, which we were able to figure out. You can also share a confluence with that level. So there is a tendency that price might likely evolve into buy pressure around this area to incite another wave. So we are not going to be selling the US tech unless price action breaks down this trend line. Remember, we have a demand zone here, takes out all the buy position there, followed by selling pressure on our lower time frame, then we could be joining that decline to the downside. So if price does not break down that bullish trend line or this demand zone at the 10,800, we are not thinking of selling US tech. So that is my view there on the US tech. Then we went on to talk about the USDJPY, where we are being in profit since yesterday on the USDJPY. In fact, since the beginning of the week, we joined some buy momentum, which gave us close to 200 pips here after buying right above the 133.150. And as soon as price got into the 134.300, we started witnessing selling pressure around that area, which gave us that leverage to join that decline to the downside. So with a breakdown of that bullish trend line, we joined the bearish momentum to the downside. And in fact, we have like 3 positions running on the USDJPY currently. And for those who had missed out on this opportunity, we have identified 2 structures that we shall be using to guide our trading activities for today. The first one is after connecting the series of lower highs here, we had this bearish trend line figured out. So we are going to be using that bearish trend line coupled with the 132.400 level here as a yardstick for our trading activities for today. So how are we going to be using the structures to guide our trading activities for today? Well, the first one is this. If price comes back into the structure, which also lines up with this bearish trend line, and immediately does that, we scale down to our lower time frame. And if we start seeing selling pressure below the structure, then we want to be joining that decline to the downside. So that is one scenario for selling opportunities here. And the second scenario for selling opportunity is if price continues to the downside. Instead, it did not come back into the 132.400, but instead it continues to drop to the downside, and price breaks down the 131.00 level. Selling pressure below the structure should give us opportunity to add more position to our existing trade. And if you are not yet in this trade, it is an opportunity for us to join that decline to the downside. Now, there is a caveat to this setup here, and that is if price breaks out of the 132.400, a level which also shares a confluence with a bearish trend line, then I want us to be seeing this as the beginning of a counter trend opportunity. And if this happens and we start seeing buy pressure above the 132.400 right on our lower time frame, it is a good opportunity for us to join a rally to the upside with a take profit target sitting somewhere around the 134 and the 134.500 level, a level which shares a confluence with a trend line that was broken during the New York session yesterday. Then we went on to close the day with the XAUUSD, where we saw we were able to take some profit yesterday with about 1,300 pips after taking advantage of the buy position here. I told you I missed that opportunity. It was unfortunate, but it's okay. We live to trade another day. Though throughout this week we have been profitable. Remember, we cut about it over 1,000 pips here at the beginning of the week after price broke out of that structure. And right now, price we have been witnessing selling pressure right around the $1,820 level. Remember, that level has been a selling niche for participants since the beginning of this month, and I'm of the opinion that sellers might likely take over the market from this area. Now, to guide our trading activities for today, I've been able to identify 2 structures here. One is this trend line. As you can see, it has been guiding price action since yesterday. And then we also have the $1,815 level, which has been holding by pressure in the last 12 to 18 hours. So one thing I said here is that if we are going to be looking out for selling pressure on this one. And the reason why I'm looking out for selling opportunity here is simply because of how the 1,820 has been negating buy pressure since the beginning of this month. And in fact, it's over 4 weeks now. Buyers are unable to break out of the 1,820. So I'm of the opinion that we might be having selling opportunity coming at any point in time. So in order to take advantage of the sell opportunity, we want to see a breakdown of this trend line, which also shares a confluence with the 1,815 level. Look out for selling pressure below the structure. Then we want to be joining that decline to the downside. And there is a caveat to this setup here that I told you. I said if we join the sell momentum to the downside below the 1,815, and as soon as price gets into the $1,806.50 level, a level which shares a confluence with this bullish trend line, we want to be moving our stop loss accordingly, lock in some profit here, and let's wait out to see how price action is going to relate to that level. Remember, that level has been a strong buying niche throughout this week, so there is a likelihood that price might get into that structure to incite another wave of bullish momentum if we cite buying opportunities on the lower time frame. However, if price breaks down the trend line, which also lines up with the $1,806.50 level, then we might be looking forward to adding more position to our existing trade. And if a further breakdown of the 1,800, remember how important I said this 1,800 selling opportunities on the XAUUSD on our daily time frame, then I want to be adding more position to my existing trade. So the sell opportunity we have on the XAUUSD today has a tendency of giving us multiple entries in the next couple of weeks. So let's see how that plays out. Now, the other thing I said here is that even though we are looking forward to selling opportunities on the XAUUSD, if at any point in time price breaks out of the $1,820 level, taking out all the sell position here, then this might be a very good signal that buyers have come to stay. So we wait out for confirmation in the form of buying pressure right around this area on our lower time frame. Then we could actually join the rally to the upside. So on this note, I want to wish you the very best of luck today as we anticipate the New York session. And remember not to get too excited whenever we see a signal which is going to be coming in form of either a breakout or a breakdown of a structure. As soon as you sight a breakout or a breakdown of a structure, my advice is that you scale down to the lower time frame. Go there and look out for a test of structure that supports the direction where price has broken towards. Then you feel comfortable joining the rally or decline, whichever the case may be. So it has been a very wonderful moment with you guys here. I really appreciate every single one of you as we look forward to the holidays. I wish you a happy new year in advance and do have a merry, merry, merry holiday and weekend. I can see who else I can see Steamroller in there. Is it okay? Steamroller. Okay, right. All right, thank you, Steamroller. Happy New Year, everybody. 231. Malu HML, good morning. Please, okay, thank you very much. Wolf77, thank you. Uh, all right, you're welcome, Steamroller. All right. So I wish you all best of luck today. Merry, merry, merry New Year and merry weekend and holidays to you all. Do have a wonderful evening. Bye bye.